In today's video, we'll be talking about the collapse of FTX and the future of cryptocurrency with author, speaker, and consultant James Greaves. So, James, you recently wrote an excellent article about Sam Bankman-Fried, goes by SBF, and the collapse of his cryptocurrency exchange FTX. For those of my listeners who don't know much about either Sam Bankman-Fried or FTX, what kind of background can you give us?
Yeah, so it's a really interesting story. There's lots we can talk about here. Sam Bankman-Fried was a quantitative trader at Jane Street and saw an opportunity in arbitrage in crypto in 2017. Basically, built a bunch of trading bots that went on the different exchanges and found that the bot in South Korea was trading Bitcoin at a different price to the bots in Tokyo versus the US. So it was actually a pretty technical feat at the time to create all these bots to get into the exchanges and just make tiny amounts of money on the arbitrage. So that was his company, the Alameda Research. And then a couple of years later, he founded an exchange to help facilitate that with traction that he was getting. And that's called FTX. FTX imploded, I forget the dates, but give or take a couple of weeks ago. Basically, what happened was Binance, the largest exchange in the world, the founder of Binance and the CEO, who goes by CZ, had tweeted some things about FTX not being some of their coins. Let me take a step back there really quickly. They were holding, instead of giving assets in dollars, they had done transactions in coins. They're like, we're not going to give you dollars, we're going to give you some of our own token coins. And so Binance basically said that the coins that they owed them, several $100 million worth, were worthless. Tweeted about it and then called them, which caused a rush on the exchange. Generally, the exchange did about $100 million in revenue in any kind of given day kind of withdrawals. Not revenue, but withdrawals. And then when Binance tweeted that, they did 5 billion. So that caused a massive liquidity crush on the bank, on the exchange. And when that happened, we found out that FTX had been trading with Alameda company funds, so customer funds. I got that the wrong way around. Let me say that the other way. Alameda had been trading with FTX's company funds. So people put money in FTX to exchange Bitcoin in and out of dollars, for example. And then while it was sitting in the account, Alameda, who's a separate company, was using that money to trade. Just then the whole thing came apart. And ever since then, it's just been revelation after revelation of just bad controls, corruption, greed, the whole story.
So let's dig a little bit deeper on the greed and the corruption and really sort of what was eating away at the heart of this company. We know that he is one of the youngest billionaires in the history of the world, aside from Mark Zuckerberg. Rising star, gracing the cover of lots of magazines, not unreminiscent of Elizabeth Holmes. So he really seemed to have the world by the tail. What went wrong here?
It's just so many things. When you really look, he had no business being there, right? And what happens in crypto, and I founded my own crypto company in 2017. I've been in this space for a while. And the thing that you find in these fast moving industries is, it's a little bit like the Wild West, right? There's tons of opportunity and you can make huge amounts of money. You can lose huge amounts of money. Very unregulated. I don't know that very is a word that we need to use for that. It's unregulated. So you get this guy that's in the right place at the right time. He has all the hallmarks of success. People start throwing more money at him and that kind of snowballs. But nobody really checked kind of what was happening behind the scenes. And I think there's a lot of things happening culturally in the media, in how companies run. But it's kind of like the emperor has no clothes, right? And I think the hard part is once you get to a company that, SBF was worth $16 billion personally on his, by the time he was 29, 30. And I think when you do that, what I look at is it used to take 20, 30 years to make that kind of money, right? And if you can do it in a couple of years now, the rules that we used to live by, that we used to be able to judge competence in a free market economy, you can generally assume that the richest person is the smartest person in the room because they've had to deal with all the complexity of running a business, right? You have to understand markets, you have to understand, buying and selling, you have to understand supply chain, you have to understand interpersonal things. But in crypto, you don't have to understand any of that, right? You just have to be good at trading and be good at having other people think that you're good at trading. And then suddenly, like, people are just throwing money at him, right? So Sequoia, who you would think would do really good diligence, they did their diligence search on him. The guy was playing League of Legends on the computer while he's doing diligence with Sequoia. And in the internal Slack channel in Sequoia, they're texting back and forth like, "I love this founder. This is fantastic." They gave him $210 million, right? The issue there is the Sequoia, Bankman-Fried's company, then became an LP in Sequoia to the tune of $500 million. So you just get into this world where, like, no one's really questioning it. There's just a lot of money to be made. Everyone's worried they're going to miss out. A lot of FOMO. And then this thing just perpetuates, but nobody checked the root issues, right? Nobody really went in and said, well, hold on, this guy's had like one job for 2 years. He's now running $16 billion of other people's money. Like, who vetted him? What does he know? He's never run a company, never had a team, never had to put controls in place. Like, there's so many things that he should be doing. And by the way, who on his team is doing that? No one. No one's doing that, right? This whole company was shocked when this whole thing went backwards. We found out that, very few people had like just simple controls that they should have had internally in the company. There was no stop trading mechanism within FTX. So when they had bankruptcy, trades were still happening. Money was still going in and out because they couldn't just turn the whole company off, which any modern trading platform should have. So just so many things happening.
Yeah, I mean, as you're describing this, it just seems like there's so many parallels with Elizabeth Holmes and Theranos, lack of internal controls and people investing without having really done their due diligence. It just seems like this is a story that keep getting told over and over and over again, right? So can you give us a sense for the scope of this scandal? How much money, how much public money was lost by the time all the dust settled?
They're still trying to work that out. I mean, you bring up Enron. It's interesting. The individual who unwound Enron, who was the CEO, was parachuted in to kind of unwind all that. And I forget his name off the top of my head, but the same guy is now unwinding this, right? And he's come out publicly to say this is the worst unwinding he's ever seen. And it's just, he said that it's like there's no accounts, there's no books. A lot of the company was run on Signal, which is a messaging app that auto deletes. So there's just, there's very few records. Nobody knows what's happening. SBF was at the center of most of this. The company was worth 32 billion. And I don't think anybody really knows the depth of, like, well, how much of that was just, that was a valuation, like how much capital was actually put in, how much, so there's the investors to look at. There's also the people in the exchange. So who was like in the middle of exchange or who had assets parked. So if you're trading, let's say, dollars into Bitcoin, this is what you're using the exchange for. And so you may have some dollars parked there. You may have some Bitcoin parked there. Once it goes down, I do not believe what we call those could be hard wallets, but those are wallets that they have access to in the Bitcoin. So that's all company funds that will be used in the bankruptcy. So all that gets seized. And so I think they're trying to make, first of all, the fiduciary responsibility is make the customers whole and then look at the investors. I don't think investors have got a chance of getting anything back. One of the large investors just wrote off the 275 million they put in and said, like, there's no hope. They're never getting any of that back. They're not going to get a cent. Sequoia took down, basically, they had a 14,000 word article about SBF and how he was the future of, like, philanthropy, and he has a savior complex, and maybe you should too. They took that down off their website. They're not going to get a dollar back of their 210 million. So the investors are all going to be wiped out. And we anticipate that anybody in the exchange too is, my guess is they get 5 cents on the dollar of what they were holding at the time that this thing had unwound. They'll be lucky. But then just crazy things is, SBF's parents had bought $210 million worth of real estate in the Bahamas, right, using FTX money, right? And so there's just like, it's so intertwined. There's so many things. It's going to take a long time to unwind. But yeah, I mean, it was just a revolving door, easy come, easy go. Like the cash it's in the four corners, right? It's just gone.
Right. So there are a number of celebrities that really fronted FTX. I'm not going to get into names, but they're very well-known people. Are they going to have any liability in all this by the time everything shakes out, do you think?
I think people will try and say that. I think people will, they make a noise about that, right? It's really easy when you do a Super Bowl ad and you get really famous actors and sports personalities involved. They've had parties in the Bahamas where they have very, very prominent people involved. I think you really got to look at like, did they go above and beyond their kind of what their contract was? So if you were just in an ad but you didn't do anything, I mean, I think the legal system, I'm not a lawyer, but I'm, having seen this several times, I don't think those guys are ever found responsible. If you were part of it and you were just like I like this, and you were telling your friends, maybe even if you were receiving commission, can you argue that some of these people were sophisticated investors that knew what was happening? And I think it's really just going to come back to SBF that like they were lied to and they had no clue. And I think it's going to be fairly easy to look at just the disaster of how it was run and just like, how did I know? Like, how was I expected to know as a celebrity, as a sports star, what was happening behind the scenes? Like all the indications I had was it was trending up. So my guess is no, but we'll see what happens.
So in your excellent article, you talked about how about 6 months ago, you saw a lot of warning signs. Tell us a little bit about what those warning signs were.
Yeah, so I mean, we'll have a little bit of pattern recognition, right? I think for me, I did a lot of cultural due diligence for the banks post 2008. So I was the guy that went in and worked with a lot of the big investment banks and Main Street banks to find out what was going on in their cultures that had caused the subprime crisis. And my findings on that really, by the way, is we always look at controls. And at the end of the day, it's people, right? When greed takes over, people find ways to break stuff, right? Is the really simple way of saying that. So I just seen this pattern of greed, and when you have greedy people that live in a bubble, they find a way to break it. So they're going to find, if it's not subprime, they'll find another way to break it later, right? And so then I'd founded a crypto company in 2017 and had seen a lot of people through. So went through the first kind of the ICO bubble. So before NFTs were a phrase, we're all doing initial coin offerings. And I could tell that was an issue when nobody was doing any delivery. People were raising, $20 million, $100 million to do this. Like, I'm going to build this decentralized whatever, right? So they say, look, I'm going to build Wikipedia, but it's going to be on a blockchain and it's going to be decentralized. And I need $100 million. And people put money in, and then everyone would talk up about it. And you could do a lot of pump and dump in the ICO market. And so the game was put all the money in, get it talked up, get it hyped up, and then exit and like just take a lot of money, right? And whoever is just Ponzi, right? Whoever's left holding the bag at the end of the day just had nothing left. So I saw a lot of these people in crypto, not everyone, because a lot of people, there were some people that were trying to really build, but a lot of these speculators came in and understood this game that was being played. And so when I saw SBF, and the only reason I saw warning signs 6 months ago is because I didn't hear about him sooner. Like if I'd heard about him at the beginning, all the same hallmark signs of all these other people, right? Which is just live in this like little, it's a diluted bubble and it's self-reinforcing. And where does it come from? Does it come from them? So people are asking, is this because of something that he was corrupt from the beginning, or did he become corrupted? And I think it's a little bit of both, right? It's like you have greed, you see an opportunity, you surround yourself with the yes men. They're now telling you you're doing the right thing, right? You just keep spinning. But you see these signs around people like not focused on the core. So I'll give you an example. After FTX raised all its money, had this $32 billion valuation, issued its own token so that you could basically, think of it as akin to issuing your own stock. And so he's buying all these purchases for cash and tokens of all these distressed crypto companies. And first of all, why are those companies like struggling? Because they don't have a value proposition, right? It's a much of the same, right? It's all this kind of like spinning up. And so he's buying companies that don't have any assets either. He's not a corporate raider. He doesn't understand how to read those things. He's a trader, right? So he doesn't know fully what he's buying. Then he's using his liquidity and his headspace to now try and save these failing companies he's brought in a down market, as crypto's been going down for the last year. And like everything's going against him, right? And he's still like touting and getting in the media and telling everybody like how he's saving this. Everything's going against you. Like, how do you have liquidity to do this? How do you have the assets to do this? And the answer is he didn't. And he didn't even know. As we're now unpacking what happened, nobody knew how much money they had on hand at any given time. So he's just making these trades like just based on like hype and intuition. And that's a really, really, really dangerous place to be.
So what does all of this mean? I mean, you've talked about how crypto has been sort of trending downward for the last year. I think I looked this morning, and Bitcoin is at, I think, 16,000 after highs of over 50. What does all of this portend for the future of cryptocurrencies? Is this the end, or can they sort of pull themselves up by their bootstraps and recover?
Yeah, I mean it's interesting, right? What's the quote? The rumors of my death. I've exaggerated. I completely butchered that, I know. But yeah, crypto has this, and I think that the mainstream media and mainstream finance like really want crypto to fail, right? And I get it, right? Crypto, there's a lot of hair on it, right? It's messy, it's scrappy, it's ugly, it's unregulated. People lose money all the time. I think the underlying premise still stands. And if you can get away from the hype and the nonsense, and that is Bitcoin specifically being a intermediary less asset, right? And so does it have value? Well, it does as long as people think it does. There's still millions of people mining it, millions of people doing it. Still, I don't think it's going anywhere. So as an asset class, I think it's going to stick around, right? It's been through just as many dips. In the early days, back when I first started tracking it, it went from like a couple $100 a Bitcoin up to $1,300 and then crashed back down to 500 back in 2014. Then it got to 2017, it went up to 20,000 and then crashed back down to 3,000 and stayed there for like 2 years. Then it went up in the 50s, approaching 60,000 last year, and it's now back down at 16. It'll probably stay there for a couple of years, honestly. But I can anticipate it will continue to go up. There will only ever be 21 billion Bitcoins. I anticipate that Bitcoin will continue on a 20, 50-year trend. It's not going anywhere. It's like gold. It's a fantastic store of value. It's massively tradable. It's programmable. You can do a lot of other things with it. So I think as an asset class, it will continue to survive. And even the modern markets, the stock market's been through just as many villains as SBF, right? Well, we've gone through all these and had to learn hard lessons. You think about all the criminals that have been through, Nick Leeson, Bernie Evers, like all these reasons, right? We've had to put in like controls. And so it will adapt, it will continue. My personal view is that everyone's doing NFTs right now, non-fungible tokens, and that's got traction because it's tied into kind of the entertainment space. The idea that you can put at like pictures, movie clips, music, and attach them to a token. That idea still has legs. I think NFTs will not exist in 2 years as we know them. It will spike, it will decline. Something will be built better, and it will continue to evolve. So, crypto as we know it, or as we knew it last year, is dead, but the asset class will continue.
So, for those of my listeners and viewers who are sort of in the traditional financial planning space, traditional retirement planning space, how does crypto fit into all of this? For someone who just wants to be able to build up money, safely, productively, draw it down in retirement, how does crypto fit into the puzzle?
Yeah. So for retirement, right? It's on. You look on the frontier, right? It's just massively volatile, massively risky, and it has potential to like make you 10,000%, but you could be wiped out to zero as well. So for retirement, I can't imagine that many people would want to look at this too hard. Probably, I would guess that most advisors at this point have got a really good answer for when people ask them about it. And I'm sure the answers are much more prevalent when crypto is in a spike like it was last year, when it just compounded win after win after win. Like, why am I not in this, advisor? Why should I not be doing this? And I think most people now have the answer, which is like, you could be, if you want to put a small allocation in there and bet, but it's Vegas money. Like, just be aware that it's your Vegas money. And if you want to put a little bit of money in there and see what happens, I personally, I've got a little bit of in there, right? I've done all extremes. Like I was all in, then I was all out. And now I'm just, I put a little bit in there because I think long term, if you just want to buy some Bitcoin and hold it for 20 years, I think that's a good bet. But if you look into like draw down cash, it's really hard when it goes to 60 and then it's 16, like 6 months later. You can't draw any money out, right? You're now locked in until it turns back up again, if it does. And I think it will, but it could be 3 years until it goes up to 100. And you're like, then you're in the money for a year. And then you're out the money because it could drop down to 30 again. So, as it's a really difficult asset class for retirement and for stability.
Yeah, and I think that the answer to that question that I hear most often among my peers in the industry is don't put the amount into Bitcoin or crypto that you're comfortable losing, right? Whatever amount you're comfortable losing, that's a good amount to put into crypto. If you're not comfortable losing any, then don't put it into crypto. So
and I think everyone should actually. I'm not an advisor in this, and probably shouldn't be. But my personal view is like you need a little bit of like excitement in your portfolio, right? And even if it's like 1%, right? Just say, that's your fun money, that's your Vegas money, awesome, right? But it shouldn't be a big piece at all.
Got it. Okay. Well, James Greaves, I really appreciate your insight and really appreciate you coming on today.
Yeah, lovely to see you, and thank you.
Okay, folks, that's my interview with author, speaker, and consultant to banks and fintech companies, James Greaves. If you're looking for someone to help you navigate your way towards a tax-free retirement, head on over to davemcknight.com and click on the Work with David button. I'm happy to lend a hand. And don't forget to click like, subscribe, and the bell so you never miss a video. And feel free to drop any comments or questions into the comment section below. I answer every single one of them personally. This is David McKnight. I look forward to seeing you on the next video.